British public, it clearly isn't yet done. There's a lot that people still want to know, and want to say, and want to hear information about. But do you think that statement, first of all, from the King, was the right tone? I mean, it was pretty ice cold towards Andrew, wasn't it?
Yes, I mean, we're crawling there. Kicking and screaming, the royal family are coming to realise how serious this is. They brought this crisis on themselves. If they dealt with Andrew 10 years ago, 5 years ago, even a few months ago, properly, this thing wouldn't have expanded. And that we're now asking wider questions about royal accountability and privilege. And the questions asked about the King's role in this. You know, why did he contribute? Even if he didn't contribute, he must have been aware of the discussions and the arguments for paying her this hush money. But I know from my own research that complaints were made to the Queen for many, many years, to her private secretaries. This would have been shared with Charles. Journalists who raised issues there were denials, there were legal threats, there were strong-arm tactics. So I just feel that the public still don't quite feel that we've got the full story. And if it emerges that there's been a huge cover-up and the palace have known about this for a long time and did nothing about it, then I think that is going to increase public anger and concern. And it is about this very delicate relationship between the public and the royal family. That privileges come with duties and obligations. And if we feel they've got their noses in the trough and taking advantage of their royal status and the fact that there's no accountability, then I think people are going to be very concerned. And that is the problem. There has been no oversight to the royal family, accountancy, parliamentary scrutiny, anything like that. Because let's not forget, this is
extraordinary. It's extraordinary. Good afternoon, everybody. Big day for some news in the market, particularly on tariffs. But I listened a bit to Trump's press conference, and you got to admit he's a pretty good master of scenery, and that looked good, how he has set up the press room, and his message was great. So I think we'll get through it. I don't think there's any such thing as a conservative there's no way to say it. I don't think there's anything such as a conservative woman. So Amy Coney Barrett voted with the Liberals. But then again, so did Roberts. I wonder if he's really, I really wonder if he's conservative too. But anyway, it is what it is. We'll get through it. As Trump said, it gives certainty to our economic situation, and that's the thing. If I understood it, the tariff is 10% now across the board or something like that, but it gives certainty, and it's the uncertainty that spooks markets. Anyway, Railtown's down basically half a penny at 32.84. That 52,500 loser is back in there. Railtown is in the red today. GDC in the green at 340. Nixie in the green, up almost a penny at 53.88. Next strip in the green, up almost a nickel at 30562, and Finger up almost 4 cents at 112.80. It does look a little bit concerning regarding war in Iran, but you know, we can't do anything about these things. I talk about them, but nothing it doesn't matter what I say. So we got to focus on what we can do. And what we can do is Railtown. I have a slightly mixed message on Railtown today. I don't think it's mixed, but I'm going to show you what came up. But if you want to look at it with a bit of a squint, you can see that it's a mixed message. I'll try to summarize it before I start reading. Uh, yeah, there's no war news. Oh, a baby giraffe was killed. Doesn't seem like there's any war news. I guess the tariff news took all the oxygen. So good. Maybe we'll get through this weekend without war. Our new number on Roadhouse is, it's not much higher, but we're getting over 18 million inch by inch. We are at 18 million shares, 16,652 of Railtown. You guys, that's a testament to your fortitude, your ability to withstand this prolonged period and actually buy more shares. So I commend you for that. I'll make a short list here of what I should cover. Um, um, not too much to go over. Let me see what we've got here, because again, if I switch and there's a couple of pages of comments, if I switch, come back, they're gone. So I better start with your comments. Hey, Jason, you're first here. Jason says hello, William and RT crew. Julie Kim, hello, William and RT team. Peace. Jim. Wow, wow, wow. I don't know why the microphone keeps going out. I'm debating. I didn't do it as I began because I'm going back and forth. But I'm debating putting up my Venmo tag at the end of the call. I might do it because I need to pay the various and sundry things to keep this going. So, but I know you guys have been generous, and I hate asking, so I'm betwixt and between on it. We'll see. We'll see if I even remember to do it at the end. Julie, that's great. I got to write that down. It's awesome. Very good. Mr. Nito, or Neto, I guess, not Nito, Neto. Hello, Mr. William. Hello, Mr. Neto. Mr. Neto says, I hope you're doing great. Same here. Back at you. Let's see what the tariff news is doing to the markets. I don't think much. Basically kind of flattish. Yahoo Finance. The High Court delivered a stinging rebuke to the key pillar of the president's second term agenda. Well, stocks rise. Trump blasts Supreme Court, says he'll impose 10% global tariff. Amazon just shared great news for this AI chip maker. Hint, it's not NVIDIA. That's from Motley Fool. Let's see if they actually answer that. Large portion of Amazon's new data center capacity coming online over the next couple of years will include NVIDIA, but a growing portion, they won't get to the point. They have their own Graviton, Trainium, custom chips. So it's going to take more. Of course, they don't get to the point. Have to take some more searching to find out who makes these chips. Marvel Technology, Marvel, Marvel. Marvel. Should you buy Marvel? I don't know. All right, let's get off of Marvel. After all, I got off of yours. I just got off of yours. OpenAI nears $100 billion funding round. Stifel, which is the brokerage firm, flags Microsoft Azure supply constraints. See, I think things are going to get expensive, but other people tell me I'm wrong. Nobody knows for sure. There's a huge technology rotation, and that creates an opportunity. Yeah. All right. It's Motley Fool. They must have a lot of money to spend on marketing. NVIDIA looks for boost from fourth quarter earnings. Didn't we already have their earnings? There's a new analyst report on Bayer Aktiengesellschaft papers. Let me see your papers. Microsoft surpassed Q2 earnings estimates as cloud and AI demand accelerates. All right, let's get back to your comments, and then I'll try to, it's 2:30. I'll try to read what I had for you, and then hopefully Ward will have something energizing to say. Rail down is down 2 cents at 31.81, and which I find normal, and I also find healthy. Think about building a large house or a large building. You want a good foundation. You don't want to go straight up and teeter and totter in the wind. So it's okay. All right, let's keep going. Eddie, Fast Eddie, how are you? Eddie says, good day, Sir William. Dave, Vanderwolf says, happy Friday. It's been a long time since I've commented, but I check in and watch regularly, still holding strong with RT and excited for the future. Bravo, bravo, Dave Vanderwerf. Thank you for commenting. Pat M. Well, hi, William. Wow, Pat. You guys are. I'm looking at the next elite. Right now, you listen to me. In the future, I'm going to have to, you're going to screen me through a bank of secretaries. Good for you. 19.5, 195,000. That's amazing. Congratulations. Pat M, good day for bargains. That's right. Julie Kim congratulates Pat M, saying great. Mr. Netto. Look, guys, he wants me to look at Novavax. Number one, I have a problem with that technology. So I actually don't like the idea of making money on something that I don't agree with. Now, it's not that I'm against vaccines. I'm all for vaccines, but these things, I can't talk freely. These things are something different. And so I personally wouldn't touch it. I don't care how much money it makes. But if you want to go there, go ahead and trade it. I can look at a chart. There was just a ruling that's in the advantage on the flu, the MNRA flu. MNRA is not a vaccine. It's an experiment, but they call it vaccine. It's a technology, but whatever. You have to look up the definition of that word, and I guess we can do that now just to make sure that I'm correct in my understanding. But I'm sure the definition is changed when you Google it, because we are now run by a woke mindset where consensus is more important than truth. And this is a direct result of the experiment that's been going on in the United States. I don't know if it's linked 100 years ago with kind of a communist Marxist thought, which is something people tell me, or if it just dovetails. But truth is the casualty. Yeah, the chart on it looks decent. I would say, it's going to stall here a little bit. I don't see it, breaking out in a day or anything. But I could be wrong. Anything can happen. The movement of money is turning positive. Money flows. I assume that's the 50-day moving average crossed the 200-day moving average, and the stock is breaking out of one horizontal resistance to get into another, and I would think it has to break out of 1025, 1030, certainly around 1060 before it really runs. It's already had a good move. It's gone from 625, trading now at 922. But the chart looks good. If that's your bag, go do it. I'm not particularly interested in participating in something that I think's is questionable. I can't talk outright because we now live in a world where this is a free country. We used to be able to speak, but now that a certain younger generation trained to think one way is gaining power, gaining media, gaining all that, we can't even talk freely anymore. So I guess it's worth it for some reason, but I don't think so. Just looking at the Railtown chart, that's not the best looking chart for the next couple of days, 3 days. I don't know. I don't know what to make of it in the very short run, but I also think it's normal. It broke out of horizontal resistance just over 30 cents. And of course, it broke through the 20-day and the 50-day moving averages, went all the way up to the 200-day. That's the computers play these things. And so the automatic selling comes in. We now just bounced off the 20-day moving average. My guess is they will try, maybe. I don't know if they're going to be successful. They will try to get it under the 20-day moving average. And then your first stop is 30 cents, but it could go to 29 cents. I don't think so, though. So let me look what's happening up in Canada. That's more important. Similar chart. Very similar chart. For some reason, 52.5 was the resistance, and I guess I see why. Not really. The 200-day is at 54.8, and the bottom of resistance is up there in the 55 cent range. I guess it's just about breaking through the high that the stock made in December. I guess that's what's going on. So that December was once, and then I would count these last two tries as a second time. And I guess we got to build up a head of steam to try to get through there a third time and see if that's the one that breaks out. Often, even the third one doesn't break, it's the fourth one. So we'll see. But they brought it back down. The computers brought it back down to the 20-day moving average. And that's quite a bit high above the 50-day moving average. And I would argue it's pretty high above, well, here, if you go back that far. Yeah, I'd say it's high above support, which could be read as, I'd have to print it out because the advertisements keep moving around, but it would, I think support could be anywhere from 40 to 42 cents. But if they want to take it down to where the stock broke out, it could be all the way down to 39 cents. But I'm not sure they're going to be able to do that. They've had now 2 days of driving it down. I don't know. I expect buying to come in, and that'll change these patterns regardless of the pattern. Just because the algorithms and the trading parameters will have to adjust for real buyers in size. It hasn't happened yet, but I think it is coming. E. Belanger added a small 258. I love it. I love it. That could be worth $2,500. Pay off a credit card. Mr. Nito, I can respect that. No problem. Just sharing. Yeah, I mean, people like new ideas, and eventually we're going to be able to focus on new ideas. But I like that your idea is actually a $9 stock. I like that. I want to get away from the sub $5 stocks unless it's, the only way to make money in those, in particular in this broader group that that MMTLP group is 65,000 people. We're just a small subset of that. I don't know how many people are in the sort of GTII, Finger, Vocal, those kind of groups, but it's probably somewhere between a few hundred and tens of thousands. I've never made an effort to go poach people from other conversations. I've just talked to you who have come here, and maybe I should have done that to help people. That's really what I think I'm doing. I think I'm helping MMTLP people in particular, but others, MMTLP, but others to get into a position, particularly that's at such a low price. Doesn't mean it's without risk, but I think a lot of the risk has been taken out by this long collapse. It's just so painful. But I think people can make their money back. I know the campaign, I know the goodness, and I know the hard work of people going to Congress, going to the president, writing, press conferences, gatherings, space calls. I know all of that, but I find it as fruitless as I used to find meetings when I worked through other people's offices. I used to, I'd always say, where is this getting us? What are we doing here? Let's go, you got to produce. And I'm not trying to be negative on it at all. I think the awareness has been great. I think some things might happen. But at the same time, the negative, the devils, if you will, have convinced people not to move shares of MMTLP to NextBridge, which hurts Greg in his campaign, but it also hurts everybody here. I don't know why that was such an effective message by Double D. It's wrong. I think he knows it's wrong, and it's going to cost people a lot. If I understand it, which I also cannot believe, brokerage firms are no longer transferring MMTLP to NextBridge. That strikes me as not being allowed, that status of theirs. I would think that's collusion and racketeering, frankly. But I don't know. I'm just going by what people have told me. I've already moved my shares, so it's hard for me to call and find out. But what I understand is people now, after listening to Double D, no longer can move their shares of MMTLP to NextBridge. Well, you're about to find out how much he cares about you, because MMTLP is worthless. It's a non-entity. And he somehow convinced people that they owe you. They don't owe you anything. The only person that can take control of your finances is the person listening to me. And it's hard sometimes. And sometimes a guy like me, for example, you fall, I don't know, everybody's different. But I used to have a boss, a manager that would tell me, once you have 100,000 in investable funds, it's easy from there. The hardest is your first 100,000. That was probably 20 years ago, but I don't think inflation has changed that much. That storyline much is what I mean. Because once you're at 100, you do a couple of things. Your discipline is there. You're not spending it. You're at 100, you get a 2x, you get a 5x, you're at 500. Now, everybody here, a lot of people are getting used to the rapidity of these X's. This is more of a sign of the end of a bull market than the beginning of one, or even the strength of one. It's not the heart of one. It's odd to expect 5, 10, 20x on every trade. And it means that you're leveraging with options, or you're listening to story stocks, and sometimes they work. And we've seen it. We experienced it in AME and GMC, and we saw it in Finger for a while, in GTI for a while, and CRTD for a while. And we keep hoping for that lightning to strike again, because this time we'll handle it differently. I don't know. It's very hard to sell. Very hard. And so I guess my first step in my solution to helping people is that I believe Railtown, for the simple reason initially that the company is public. Think, what other AI company out there can you buy into before the private equity people take their 50x out? What other one? You got to wait for a mutual fund, or wait for an ETF, or wait for a packaged product from one of the big bulge brokerage firms, and you miss that opportunity. On the other hand, maybe one would argue the risk is out because you're spreading it. But anyway, one thing is, Railtown went public before ChatGPT. People are like, what the hell is AI? What are you doing? What are you talking about? And the stock is according to E-Trade, Morgan Stanley's calculation, the market cap is now 68 million. For a while there, it was under 40 million, but it's very small. So for that quirk, we can buy into an AI company that I think actually is at the forefront of the quote unquote hot portion of AI for investors this year. and next year and the year after that. But that was one of the the characteristics that are lucky. The second one is the company went to raise money here in the United States. They listed on the over the counter, which set it up for destruction. But they didn't raise any money. They didn't sign a toxic financing. So on the one hand, it's been frustrating as the program selling has kicked in, but there's no large hedge fund that we're fighting. We're just fighting these program sellers that can steal at will, because people like Ann Wagner, Adina Friedman, Chucky Cromwell, the SEC, they don't care. They don't care. But it sets us up. I think Railtown is actually not a penny stock. And you're going to say, well, it's trading under $1. Well, okay. I get that one strict measure. But I think Railtown, and we'll go over it here in a second, but I think Railtown is about to prove its bona fides. And it's going to be, I believe, more valuable than Lane Chain. And then these prices won't matter anymore. So I think my solution for a lot of the pain out there is to own Railtown at 25 cents, 30 cents, 35 cents, 40 cents, and get a 10x, maybe a 20x, as the catch-up goes to Lang Chain's valuation. And then from there might still be another 5x, another 10x. And in fact, I believe the likelihood is a big company is going to buy Railtown, so you're going to get all of that increase in equity in your account without having to pay taxes. I mean, until you sell the, whether it's Microsoft or I don't know, Amazon that buys it. When you sell that, you have to pay taxes. But the increase in value occurs without the hit that paying taxes causes. And that puts us almost on a level footing with the high frequency boys and girls. It's all guys. I don't believe girls cheat as much as men do, but maybe, I don't know, maybe that's a bias. But these guys go do this. They get tax advantages. They got it through. I'm going to probably get this wrong, but I believe 60% of their short-term profits are taxed at a long-term gain. And then most of the stocks they bring down to seller boxed, or they go through bankruptcy like GTII. So all those gains happen without a 1099. No taxes. It's theft right in front of your eyes. And everyone looks the other way. Oh, I don't know. Well, short selling is good for the markets. Because everyone's paid off. So I think Railtown gives us the best opportunity to take advantage of some of the mechanical levers they use to make money. We're on the other side of it. It's not because we're smarter. It's not because we have any real levers or we know how to day trade. It's just that the industry of AI, this AI for everyone, this AI for everything, this AI of things, this AI that's going to transform computer markets in a bigger way than any other transformation. According to James Altucher, it's the biggest technology transformation and economic transformation and wealth building opportunity in 150 years. He doesn't explain himself. I think the only thing he could be talking about is rail. the railroads. Of course, my mindset is Titusville. When oil came in, to my thought process, thank God for it. The United States no longer needed slaves, no longer needed them. Now they brought in indentured servitude, both in the South and in the North. The Irish, in particular, were but on the West Coast it was the Chinese. So it's not that capitalism didn't abuse people, but machines took place of a lot of that labor because of oil. So that's what I think the revolution was 150 years ago. But I think he's talking about the rails. But we're now on a transformation that's as big as that. And it's based on AI. It's based on AI, as we read yesterday, AI learning to build AI and scale at a rapid rate. And the transformation in the world's largest industry, software. Software is the world's largest industry. Guy like me wants to say, oh, it's got to be energy, it's got to be oil and gas. When I push back on that, the answer comes back, yeah, but all of that's run by software. And you know what? It's not wrong. It's not wrong. All of that software has to be replaced with AI to keep up, to survive. And it will be. And then new markets are going to explode in size because of AI. So this transformation, the wind is at our back. We don't have to day trade. We don't have to look at a chart and say it's about to break out and have a run or whatever. We don't have to do that anymore. Railtown is our way of participating in the AI transformation, just like a private equity boy or girl. Just like them. We're able to buy before the X's happen, and we get to have the first easiest X's. That's my opinion. We already have a little bit up, but I think the first 10 or 20X, 25X, we get to get, instead of some group out of Chi-Town or Palo Alto. And so that's my solution for trying to help people get out of this morass, this horrible misstep we all made in MMTLP and others. The only other strategy I think you can deploy is you can listen to Ham, who I think actually, when he's on, he can actually move prices. I don't think the Dans and the Franks, they're just copycats. They just come in and say, hey, what about me? They get a deal with a company, they get cash, they get free to trade stock, and they join in on somebody else's work. They're just slob. I don't know. I met one of them, just a slob. I forgot which one it was, so I can't be particular about who I'm talking about because I don't remember. If you want to play Ham's ideas, let him pump them. Let him pump them. You dump them. If the same person pumps and dumps, that's illegal. But let him pump them. You get in when he's talking, you're not breaking any law. But just don't get greedy. I mean, it's incredible. I fell into it with GTII and Finger and CRTD. What the hell? Those stocks went from under $1 to $8. What was I thinking? Well, I was thinking Ham's story that it's going to 1,500 or 3,000 was right. But I'm convinced now that they're not going to let that happen. They have it all under control. Occasionally it does, and you need a group of guys on the long side cheating, breaking the law the way the others do, and sometimes it breaks out. But how do you know which one's going to do that? How do you know? So if you follow him, he's usually tuned in, and he usually has some ability through his dint of his hard work, mostly, to get a stock moving. Maybe not that same day, but in a relatively short period of time. Well, take the 2x, take the 5x, take the 10x, and let somebody else dream. Let him pump, you dump. Nothing illegal about that. As long as you're not coordinating with him, it's not illegal. Just listen to him. You're not in some sort of conspiracy. Let him pump, you dump. That's one way to do it. But I really believe you cannot make money that way, because you're going to make a mistake. You're going to be traveling. You're going to be, out at the shop or something, and you're never going to get it right. And then your emotions get in there, and you got to catch up. Railtown, you just buy it. I actually think it's a set it and forget it stock. I mean, I'm here every day and I'll show you, I'm trying to figure out what could be wrong with it. And I'm about to show you. But I think you buy the stock, you don't day trade, you don't listen to any of the other distractions, and you let somebody else come buy the stock. Now, my opinion, it could be very soon. I hope it's soon. Because in the background, I have a major concern that the secular bull market, the baby boomer market, is going to come to a thudding end. And that's going to be tough for all valuations. It'll be brief. It'll be 9 months or something like that. And it'll come roaring back, but not back to those highs. And it'll be new leadership. It'll probably be AI. So, if we have to go through it, we can go through it. But I'd prefer that a buyout happen before that. So maybe I'm biased a bit, but I think Railtown's susceptible to being bought within the next 6 months, and maybe next quarter get an offer. I mean, somebody here mentioned they're already receiving regular offers. So I guess if that's true, part of my prediction is already correct, that they would start seeing buyout offers. This isn't about me. It's just trying to give you some confidence in the story. It's not really about me. So if your account can go up, let's say 100x, 50x from here, and you get, I don't know if you can call any technology stock a blue chip stock, but you get up into that sort of investment grade type of technology stock, which I don't really think is quite investment grade, but I don't know. Let somebody else define those. Then you have an account that's like an aircraft sink. And you can do some of your dibbles and dabbles with listening to the Charm Boys. But man, which trade hooks you back into hell? I want to get you out of hell. All right, Railtown is now down 2.5 cents at 31.4. And the volume's pretty low, 68,530. It's a lesson, ongoing lesson, that when we buy because of a good event, which is a terrific event, that the Steely Dan guys, Fagan and the other fella, buy in, we run out of money. So the heaviness of the computerized selling, it has its short-term day, and their goal is very short-term. It's totally different than ours. Everything else is in the green. Let me keep going with the comments. Pat says thanks, Julie. Account settings. Hello, William and all. I checked my horrible scope and got to know something. So I went ahead and bought one share and paid $7 in fees. I'm very smart. Well, just blend the $7 in with all your others, and it's a cost of doing business. I love that you bought one share. I'm going to write it down. I'm going to write it down. One share. I can't even afford to buy one share. Mr. Netto, I definitely enjoy when you share your view and experience in this field. Yeah, I'm outstanding in my own field. Those were the birthday cards, used to have that joke in it. William George was on a space call yesterday. Who's George? Palakapalapalagus was on a space call yesterday evening. He's extremely positive about the to be determined today's decision regarding MMAT subpoenas at the Nevada Bankruptcy Court. 1:30 p.m., 4:30. All right, we'll stay on and see what happens. I think he and John Murda both acted in good faith. Of course, the SEC, they're trained to go after CEOs. That's their training. They go after CEOs. All right, Railtown's now down 3 cents. So they must have broken that moving average. Let me see if, I think this is in Canada. Let me see if they did it in Canada. Well, they're bringing it down to the moving average in Canada. The heaviness. Where will we find it out? It's a to be determined. Today's decision. Oh, it probably could take more than. It's not going to be announced at 1:30. Justin Babish, add 20. All right, Justin. $2,500. That's awesome. Awesome, awesome, awesome. Going to zero. What's going to zero? HD Miko going to zero. Is zero a place? Well, are you telling us where you're traveling? I don't know what you're trying to say. Do you mind if we move on? You seem like a relatively educated person. Maybe you could flesh your thoughts out. Little Square. Without energy, you can't run the software. Exactly, Little Square. I agree with you 100%. I think one of the greatest opportunities out there in this next cycle, 5 years, 10 years, 15 years, particularly as older guys die and go away and the energy industry. I mean, there's a lot of talented uh, men and women in energy, but this woke view that pervaded schools for about, particularly up around Boston, where Fidelity is and other trading desks. This view that um, the world was going to stop using oil by 2035, and therefore investments in oil, and for that matter, natural gas, were had a limited duration. Uh, it caused a tremendous underinvestment in oil and natural gas, and I think it's going to set up shortages. And I think you're going to see oil prices in a relative, I think oil prices, unless we go to war, I think oil prices are probably headed to $30-$35 a barrel over the next, I don't know, year, less than a year. But, and maybe if we have a crash in the market, anything can happen. But after that, and that may not happen if we go to war, but after that, uh, I think oil and natural gas prices are going to be unbelievable to people. I think you're going to see oil at $500, $600, $700 a barrel. When you go to the gas pump, the gasoline pump, when you go today, add a zero. Imagine that. You go load up and it's $45 to fill your tank. Add a zero. Drive around thinking of the world then. I think that's coming. And natural gas, it could go 10, 15 times higher. So, although there is a lot of natural gas in the world, it's just about capturing it. The methane hydrates would make someone truly rich if there were the technology to capture them. There's a lot of methane bubbling up in Siberia and in parts of Alaska. I mean, there's plenty of this natural gas, as if you want to call it that. It's just, how do you trap it? But I agree with you. Energy is going to be a huge opportunity to create wealth, and very sustainable, to create income and create wealth. Ricky Brogan, Marion. I'm losing it. I don't know what you're referring to. Mary, other than Mary. Chess night. Good Friday, William, got my taxes done, left me a chunk. So I bought, wow, chess night. You guys are amazing. I'm going to have to call all of you ma'am and sir. Good for you, chess night. Jack Hamilton. Good afternoon, Sir William and RT fans. A small amount of interest came through, so I love it, Jack. You buy 43 shares. I love it. 95,158. That's great. You're catching up with Donna. Jack Hamilton. I see there's a shill in the chat. I feel a little shill in the air. Always builds my confidence, knowing they're still around. Nice going, Chess Knight, Pat says. Account setting. Some of MMTLP community members are going to be at court today, so keep an eye on Jen Keppela's post. She's an outstanding person. I'll try to look her up. I think she was at the SEC press conference. I also think George Palikaris will be joining a space call later today. Well, if we're still here, we can listen to it. All right, let's go through. I don't even know where I'm starting with what I brought, but let's see what I have. I know where it's finishing. I just don't know where it's starting because I can't remember. I've been working on that other project, so a lot of my downloads are not relevant. Okay, here we go. This came from Ward, and I much appreciated. Railtown's AI stack, Railtracks, which is agent orchestration, Rail Engine, which is real-time event ingestion, and Conductor, which is the observability, and everything else. Railtown AI stack targets scalable AI agent infrastructure for event-driven systems, extending beyond literal rail to any high-throughput AI workload like autonomous agents, RAG pipelines, and real-time analytics. Rail is a description in AI, believe it or not. So when they say beyond literal rail, that means something to engineers. I'm not going to stumble over myself and try to explain it to you, but it's as simple as staying on the rail, staying on track. When niche rail AI startups are limited, dozens, not hundreds, broadening to AI startups, building agentic systems, robotics fleets, or infrastructure-heavy platforms, I guess it yields a much larger pool needing such stack-like software as Railtown provides for deployment, monitoring, and scaling. Here's an expanded list of 50 prominent AI startups over the last 1 or 2 years across the agentic AI, robotics, autonomous systems, and infra. And I think that means software infrastructure, but it might be inference, although I think inference is spelled differently, which align with Railtown's capabilities drawn from industry landscapes like agent frameworks, robotic stacks, and sovereign AI builders. So there's your agentic AI startups. These focus on multi-agent orchestration and real-time decisioning prime for rail engine conductor. So I'm not going to go read everything they do. I'll just read the name. There's Adept AI, Imbue, Multion, Astra AI, Super, AGI, and Crew AI, which we've talked about before briefly. And then AutoGen, backed by Microsoft, LangChain, LangGraph, startups ecosystem. I don't know what a llama fork is. And then you go into robotics. Those were the agentic AI startups. Then you have robotics and automatic systems, autonomous systems, standalone, I guess. Real-time sensor fusion and fleet management. Demand. Railtown's ingestion and orchestration. So again, just to give the names. Figure AI, Agility Robotics, Boston Dynamics Spinouts, Covariant. It's all robots. Symbotic, Aura Innovation, Wave, Ghost Autonomy. And then you get down to the AI infra and edge startups, Sovereign, Edge AI builders, Mirroring, Railtown Stack Needs, Mirroring, Grok, Together AI, Fireworks. Mobius Labs, Samba Nova, Cerebras, GraphCore. And then there's your sovereign and data center AI. Data heavy startups needing ingestion, observability for localized AI. XAI, and it says Grok agents. Anthropic, Claude agents, these are big. Mistral AI, that's Europe. CoreWeave, Lambda Labs, RunPod, and additional scaling startups, which is what Railtown has been designed for, to scale. Replicate, it needs conductor. Hugging Face, Base 10, I guess, sorry. Banana Development, Hellas Cone, Langsmith, Phoenix, Weights and Biases, Human Loop, and Prompt Foo. I wonder if Langsmith actually needs Railtown. I don't know. This isn't an exhaustive list. AI startup directory, Crunchbase lists over 10,000 AI firms, but fewer than 500 fit the agent/infra precisely. But this list focuses on high-profile names likely requiring Railtown-style tools for abusing the English language, for productionizing agents at scale. For hundreds, target agentic AI alone, prioritize based on your Canadian tech infra focus, ? But look at what they include. They include LangChain. They include some of the bigger names. So Railtown really is, perhaps, as Ward calls it, disruptive technology. So then Ward asked about LiDAR. Several LiDAR companies developing sensors for autonomous vehicles, robotics, and industrial applications can leverage Railtown's AI stack. RailTracks for agent orchestration, Rail Engine for real-time event ingestion from sensor streams, and conductor for observability, all as an example. So all of these LiDAR companies can leverage Railtown's AI stack in order to process massive point cloud data, enable edge AI decisioning, and scale fleets or fish. Key LiDAR companies, for example, Innoviz Technologies. This is an automotive grade LiDAR. Rail Engine ingests live 3D scans for real-time perception agents, vital for their Mercedes partnerships. Hesai Technology, solid-state LiDAR for, I guess AVs are automatic vehicles, automated vehicles, and humanoid robots. Agent stacks handle high-fidelity point clouds for physical AI navigation at this last conference. Luminar Technology, long-range LiDAR, integrated in Volvo. Rail tracks orchestrates fusion with cameras and radar. I think that's just huge. For L4 autonomy, Velodyne, spinning and solid-state sensors for drones, vehicles, observability via conductor monitors, distributed sensor fleets in real time. Wow. Via 4D FMCW LiDAR with velocity data, event-driven ingestion scales, Doppler enhanced agents for edge robotics. These firms generate petabytes, which I guess is a pretty big byte, of streaming data needing Railtown style infra to productionize AI agents for mapping, obstacle avoidance, and predictive maintenance. And rear seat driving. All right, so then this is Ward's follow-up question. Railtown AI's name draws directly from rail as a metaphor for scalable infrastructure tracks. Think train rails guiding agents efficiently, mirroring how their stack, rail tracks for agent orchestration, Rail Engine for real-time event ingestion, conductor for observability, quote unquote, lays tracks for AI workflows, not literal trains, although they are across from I forget if it's Rail Engine train station or it's named something else, but they're right across from a similarly named part of town. They're not in physical rail, no shite Sherlock. It's branding for high throughput AI agent systems handling streaming data, fleets, look at that, fleets, and edge decisions like those in AVs, robotics, or infra. This ties back to your original query on their software stack and matching startups, broadening from niche rail AI to agent-heavy sectors needing such tools. No delusion, just connecting the dots on scalable infra needs. pretty good what Ward came up with. We're down about 2.5 pennies at 31.5 cents. Nixie is now down half a penny, 52.6. We're at 330, so account settings. I will keep note here about the space call and Jen Kepelis. We'll try to follow that. All right, so now I joined in with my wise acre questions. My question is, can Railtown, right here, can Railtown use artificial intelligence to build its new generation of its artificial intelligence? And then I ask, can someone else's artificial intelligence build artificial intelligence that eclipses Railtown's tools? That was my question here. You can vote whether my question was more incisive than Ward's. I'm just kidding. I just want you to know Ward didn't ask such a negative thing. I don't think this is a negative question. It's just something that nagged at me after we read that piece yesterday. So anyway, here's the answer. Now, in this context, don't get us scared. Don't get us scared. All right, I'm gonna see here if I can. Of course, it doesn't work. Oh, it did. KCAP. All right, I'm gonna follow KCAP. I already follow KCAP. And 1 hour ago, KCAP says people keep asking for Apple to Apple's bankruptcy case where a Chapter 7 trustee subpoenas market makers over alleged trading misconduct, and they move to quash. To my knowledge, there isn't one. Well, I would find it hard to believe that a trustee is going to get involved. I got to think that through. But a trustee to go over wrongdoing, I'm not positive that I guess the only thing would be that would be a source of the estate. If you can prove fraud and thereby go claim assets, that becomes part of the estate. But I don't know. I wouldn't have high hopes, but don't let me be negative. Okay, so the answer to my groundbreaking question, yes, Railtown can absolutely use AI to help build successive generations of its own platform, that's pretty good for us. And yes, other companies' AI could, in principle, build tools which surpass Railtown's stack. That makes you go, oh shoot. But keep listening. It's not It's not a killer to our theory. One, can Railtown use AI to build its next-gen AI? Railtown already ships an agent-focused platform, Rail Engine for real-time ingestion, RailTrax ADK for building agents, and Conductor for observability, aimed at helping developers build and operate agents at scale. That same stack can be looped back on itself in a few ways. I would say looped back is repetitive, but anyway, you can use coding agents to work Railtown's own code base, internal agents built on RailTrax, plus frontier code models can handle the boilerplate refactors, test generation, documentation, and even suggest architecture changes. Use Rail Engine, you could do it. The stack can be looped on itself using Rail Engine and plus Conductor for self-play and evaluation. Spin up agents that stress test Rail Engine and RailTrax with synthetic workloads, then use observability data to automatically propose performance, latency, and reliability improvements. They could also use continuous learning from customer usage, telemetry, and traces from customer agents through Conductor, can be mined to spot missing abstractions, common failure modes, and new primitives Railtown should add to the platform. So that all sounds good. Actually, it sounds very good. That means Railtown can grow rapidly. So outside research shows self-improving coding agents that literally rewrite their own code and get better as you give them more compute. Like Sakana's Darwin-Godel machine concept of recursive code modification. Railtown could adopt similar patterns, use coding agents plus benchmarks to propose and test changes to RailTrax Rail Engine, then only merge variants that measurably improve throughput, stability, and developer experience. Can someone else's AI build AI which eclipses Railtown? That was my nightmare question right here. Nothing about Railtown's tech moat prevents a third party from using powerful models and agent frameworks to build a more capable competing stack. And that makes you take a deep breath. But just stay with it. Several trends push in that direction. Stronger code models are already helping build themselves. OpenAI recently described a Codex-style coding model that materially sped up its own development and deployment pipeline, i.e., quote, AI that helps build its own next generation, unquote. That same capability is available to anyone with access to comparable models and enough data and compute. That might be the barrier to entry, at least initially. Self-improving agents. Research like Darwin-Godel machine shows agents that iteratively rewrite their own code and outperform non-self-improving baselines on coding benchmarks, given sufficient compute and evaluation harnesses. A competitor could pair something like this with a greenfield agent platform and iterate aggressively. So that makes you kind of take a deep breath. So it goes to the second question I asked. Can someone else's AI build AI that eclipses Railtown? Nothing about Railtown's technology moat prevents a third party from using powerful models and agent frameworks to build a more capable competing stack. Darn it. Several trends push in that direction. We already read the first paragraph. The second one, self-improving agents, research, and we read that one. The third one we didn't read, tooling, infra fragility, and security. Security analysis for AI pipelines emphasize that current AI development stacks have real vulnerabilities. Data poisoning, supply chain attacks, and insufficient pipeline security, creating both risk and opportunity. A well-designed rival platform that bakes in stronger AI security, versioning, and integrity guarantees from the start could become more attractive than Railtown's tools, especially for regulated enterprises. So all of that's annoying. But we have to know about it. So in practice, yes, a competitor could stand up an AI-assisted engineering loop. In other words, a strong code model plus automated tests plus performance benchmarks plus telemetry and iterate on an agentic infra platform more quickly than Railtown, eventually surpassing it on features, robustness, or scale. But remember, Railtown's already built for scale. The key differentiators become data, integration surface, security posture, ecosystem, and execution speed, not just who started first. LangChain. Railtown's advantage is it already has a real-time ingestion engine and observability tailored to agents. The risk is that those same capabilities are now becoming table stakes for any serious agent platform. If you want, I can sketch how, I don't know if I asked them to do that, because I'm not an engineer. I just play one. So I asked my follow-up question instead, does this risk reduce the value of Railtown? Does it make it more likely that Railtown is sold to or purchased by another? So the answer came after thinking. It's a real risk, but it doesn't automatically destroy Railtown's value. It changes where the value sits and makes certain exit scenarios, including a sale, more likely if they execute well. Does AI building AI reduce Railtown's value? It's a relative risk. It's a headwind on moat depth. But listen to this, in a market that is simultaneously exploding in size. So you wonder how deep your moat is. You wonder how much protection it has. But as long as it protects somewhat, you have your position in a market that is exploding in size. Railtown's core is its agentic dev infra, Rail Engine, real-time ingestion, Railtrax ADK, agent dev, conductor, observability for building and running AI agents at scale. AI-assisted coding makes it easier for others to build similar primitives. So the pure tech moat is weaker than a world where only a few players can ship this. But, listen to this, but the category is growing violently. AI-assisted coding and dev tools are now a multi-billion market with room for many winners, not whiners. Room for winners, not whiners. Copilot share dropped as new entrants grew even faster, showing that competition expanded the pie instead of crushing margins. That dynamic actually supports higher aggregate value for good execution, even if no one has an unassailable moat. So you got competition. Where the value shifts, it shifts from we alone can build this to several bullet points. It shifts to owning distribution. Who already runs their agents on you? Well, guess what? TELUS and Uniserve are about to flood Railtown with users and people who already run their agents on Railtown. Next bullet. It shifts to who owns the data. You got to own the data, telemetry, deep insight into agent workloads. And I would guess the data center is going to help with that too. And then the final bullet point, it shifts to owning a defensible ecosystem. In other words, integrations, compliance, Canadian sovereignty, positioning. Railtown is explicitly pitching a Canadian AI sovereignty and ecosystem story with TELUS Canadian hosting, which differentiates it from generic global tools. So yes, AI, which builds AI, compresses the product gap, but it does not zero out Railtown's value. It increases the importance of go-to-market ecosystem and, quote, who trusts you to run their agents, unquote, versus sheer feature count. Does this, and this is my other question that I asked, does this make an acquisition more likely? It does raise the odds. Railtown is more valuable to a larger buyer than as a long-run standalone, especially if they hit their growth targets. Strategic demand for agent platforms is high. Strategic demand for agent platforms is high. Legal and banking commentary expects AI infra and agentic platforms to be central to tech M&A in 2026. So industry information, blurbs and reports indicate that AI infra and agentic platforms are going to be central to mergers and acquisition activity in 2026, this year. A material share of enterprise software deals are projected to involve agentic AI capabilities. Railtown is exactly in that lane. Agentic orchestration, agent orchestration, real-time ingestion, and observability. Buyers increasingly, quote, buy, not build, unquote. Buyers increasingly buy, not build. Buy, not build. Big software vendors and infra players are racing to own agent orchestration layers. Given that AI tools make it easier for everyone to build internally, the marginal advantage of, quote, we can code this ourselves is higher, which paradoxically makes acqui-hires and platform tuck-ins attractive for speed, distribution, and talent. So it actually counterintuitively makes it important to go buy somebody that already has it. Signal from their cap table, the recently fully subscribed 3.4 million private placement led by BlackBerry co-founders Steely Dan, Mike Lazaridis and Doug Frieden, plus Lazaridis joining the advisory board, is not neutral for mergers and acquisition. It validates Railtown's positioning as, quote, foundational Canadian agentic infra. It also puts experienced strategic operators around the table who have already done large exits, which generally increases the probability of a strategic sale or major partnership once scale is proven down here. Net, AI building AI doesn't by itself force a sale, but combined with A, rising strategic appetite for agentic infra, and B, the fact that infra stacks are now often bought as part of larger platform plays. AI building AI does make a Railtown type asset more likely to end up inside a bigger platform, inside a telco, a cloud, or security vendor, if Railtown shows real traction. So then they asked me what my horizon was. And I'll read what I asked because I may have polluted the answer. I said, to me, the time horizon on a buyout is soon. Am I wrong? But the growth, which should be massive, will occur over the next 5 years or so, likely inside of a buyer. Can you also answer all of your follow-up questions? It did not do so. The valuation is almost rock bottom. So it seems our discussion is more about the magnitude of upside rather than the downside risk. I put that in the form of a question. So it came back, you're not crazy. And I stopped reading right there. you're not crazy to think soon on a takeout. And given where the valuation is, your real question is mostly about upside magnitude versus execution risk. So the time horizon on a buyout. Railtown's current scale, market cap is roughly US 40 million to 70 million, depending on who you listen to. This is a bite size for a strategic or a mid-tier acquirer. Fresh capital and the signals of Steely Dan, they just raised 3.4 million, fully subscribed, led by Lazaridis Fragan and other smart money. That usually buys up to 2 years of runway to prove out growth. It doesn't cause an immediate for sale sign. But on the other hand, destroying the language again, it also professionalizes Railtown and puts experienced exit minds around the table. So the merger and acquisition backdrop in the sector for last year and this year. The brains expect AI infra dev tools to remain a central merger and acquisition theme, with buyers preferring tuck-ins under 500 million US to bolt-on capabilities quickly. So I misread that. They prefer the tuck-ins less than half ability so they can bolt on capabilities quickly. Railtown screens right into that future window if they grow into the 100 to 300 million bracket in valuation. Now you're going to see this computer very cautious. I think this is all going to happen at breakneck speed, and you might see it in my questions. So soon, as in within the next 1 to 3 years, is plausible. Imminent sale in the next quarter, I didn't use that word, would be stretching it unless someone preempts the story before they fully prove out ARR. That's what I think is going to happen. But that's the, that's the investment. That's the theme of the investment. The recent raise suggests the board is focusing on building value first, then optionality. I would argue they're doing both here, but you've got a conservative computer, which is fine. We've got to hear the conservative side. You've got to try to listen to the other side. Where value will accumulate? Infra and dev tools are trading at a premium in terms of multiples when they show real usage or annual recurring revenue. Analysis put private AI infra at roughly 10 to 50x revenue. We already knew that, depending on growth and quality, with infra and data moat platforms at the top end. Most of that value often gets crystallized inside a larger platform, and this is something I think we have to adapt our thinking to. Inside a larger platform, cloud, security, dev tools, etc. Your 5-year view, it's very realistic that the steepest part of Railtown's adoption curve, agentic workloads, real-time ingestion, observability, plays out over the next 3 to 5 years after a strategic buys them, because the buyer can slam Railtown into a big installed base. Exactly. That doesn't hurt your return if you're in pre-takeout, which is our situation. It just caps how much of that curve you own. And that's why we've got to adjust our thinking maybe a little bit. It's out of our control. So yes, the base case for microcap infra names like Railtown, the case is prove product market fit, proof of concept, and then prove your annual recurring revenue trajectory, and then get taken out before it ever looks like a standalone multi-billion platform. Look, many of us wouldn't mind it becoming a standalone multi-billion dollar platform because that would be a huge return. But it might need the resources and the clients of a large company to get there quickly. It might be risky to stand alone, like OpenAI is running into that capital raising risk. It can be done. All right, so the magnitude of the upside versus downside at rock bottom levels. For an AI infra microcap, any credible ARR ramp can justify much higher valuations versus the comparables. AI infra startups are still clearing at 10 to 30x in private rounds. If Railtown gets 5 to 10 million ARR on decent growth, even a 5 to 10x revenue takeout implies a multiple of today's cap or enterprise value. Upside dominates the discussion. Market cap is already in option territory, like owning a call option, relative to what a working agentic infra platform could be worth if it penetrates even a modest slice of its total addressable market. The new round that they describe it, it doesn't guarantee success, but it anchors the notion that you're looking at potential asymmetric upside versus risk, and you're not the only one seeing it. The real downside still exists. There's execution risk. They never scale their revenues. There's platform risk. Someone bigger obsoletes them. That could be a rap song. Financing risk, needing more dilutive raises, I don't think that's going to happen. If they do stall, this can still go to a low single-digit million enterprise value in a risk-off tape. But on today's number, each incremental 1 million of sticky ARR can move the valuation meaningfully. All right, let's stop it there for just a second and look at the count closing. Let me see if KCAP has posted anything. Doesn't look like she's posted anything. So I have it, account settings on KCAP. And she has a finance degree, retired federal law enforcement, complex white-collar crimes, and she's a victim advocate. That's pretty powerful. Okay, that we went over. Ricky, Marwan Haddad, the CTO of RT, posted on LinkedIn. Conductor now supports sign-in with Apple. Wow. Let me go look at that. Add microvision to that list of LiDAR word. Word might be working. Gatik, AI autonomous trucks, Kodiak AI, all can use rail engine. Yeah. And my summary of what I just read, we're not finished, but what I just read you is indeed somebody with resources could create a competing product. It would take time and a lot of resources. But I think the same reason that your question, many of you early on, when I said that Microsoft could buy this, a year ago, and why doesn't Microsoft just do it themselves? It's all about allocation of resources and time. And believe it or not, the big boys, the big girls want to just buy it and start from that. It gives them a head start. And I think that still applies here. I'm starting to think our target in the near term is probably in the $8 range, maybe 10. And then a buyout, I would think in the $15 range, plus or minus $5. And if there's a bidding war, maybe it gets into the 20s, low 30s. But I don't really know if it's going to get to that $55 valuation outside of a bigger company. And all we can do, we can't control that. But the risk reward, there's not much risk according to what we read to the downside. There is risk. You can't hide that. KCAP has not updated. So we'll keep looking. DMAC says hello. Hello. Let me see if I can finish this up on what I was going to read to you. Of course, now I lost track. I did that, then I did two, then I did two. I don't know. Baby, I've been told. The soul of a woman was created below. Bum, 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 bum. All right, let me just make sure I'm starting where I should. Dun, 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 dun. Dun, dun. Did we read this? No. All right, so I have to bring down 3 more. No, that's wrong. All right, this one. I shouldn't have interrupted myself. Sorry. Okay, so I might have already read this to you. Oh, no, that's right. That's where we should be. That's where we left off. So given your framing, the core question isn't, does Railtown go to zero? It's, do they ever get enough annual recurring revenue plus strategic relevance to trigger a 3 to 10x enterprise value step up? I think that is such a cautious framing of what's ahead. And also how much dilution happens along the way. I think we've seen it. If you assume a 1 to 3 year takeout window at reasonable revenue multiple, and you're roughly right about today as being near the floor, for a funded, story intact AI infra microcap, then yes, most of your attention should be on sizing the upside and the probabilities, not in obsessing over small additional downside from here. If you want, we can put some numbers. I said, okay, do it. Here is a simple scenario tree. For Railtown, let me check to see if KCAP has posted anything. No. So here's a scenario for Railtown over the next 5 years with illustrative numbers. These are not forecasts. It's just a framework of thinking. So the assumption is using this market cap as 1x, using 1 to 3 years for a deal or clear outcome, 5 years for maximum, and then using revenue numbers 3 to 5 million, 3 to 5x for weak growth, 6 to 10 for solid growth, and 12 to 20 for hot strategic infra agent narrative. So the first scenario is it bombs out. There's no real traction. Your call option expires. The ARR within 5 years is shite. It's low quality. It's lumpy. No nice tech, no scale. And the outcome is miserable, as are the investors. Probability of that is about a third, 25 to 35%, and you get no payoff. Scenario 2, you get a modest product fit, small tuck-in value. So you get annual recurring revenue in 2 years, 3 years, at 3 to 5 million, growing but not hyper growth. You get a strong strength reference in a few verticals, Canada, dev tools, observability, but there's no breakout dominance. And so a mid-tier buyer shows up, whether they're in dev tools, security, a small cloud player, to add the agentic infra at a mid-single digit multiple to revenue. So the revenue might be 4 million a year, and the probability of this is another third. So 2/3 of our scenarios suck, about half to 2/3. Your payoff is 1.5 times to 3 times your investment. The third scenario, which is that you're a winner, a clear niche winner with a strong strategic sale. It's very low annual recurring revenue, and for agentic infra and observability layer, it's embedded in a few biggies, and it's sovereign. So a strategic buyer, multiple buyers show up in cloud or telco or security, and you get a sale at mid to high multiples, but your ARR is only 10 million, your multiple maybe 8 to 12, that's 80 to 120 million. You make 4 or 5 times your money from here on that boring scenario. So then there's scenario 4, which aligns with what I think is going to happen. You have a breakout. You've created a platform level asset. I believe that's the case. This is the fat tail upside, low probability, but large payoff. But again, right here, he's only using, or she, whatever this computer is only using 20 million in ARR. But you're deeply embedded in a major ecosystem, and you become a standard. So competition among several majors, and you're re-rated as a mini platform. So you get platform style multiples on forward ARR. And they're using here 25 million. So and they only give this about a 10% odds. I think the odds are low, the numbers are low, but you got a payoff in the range of 8 to 20x. So I guess I'm showing you boring numbers. So you pull it all together, it's a third, a third, a third for really kind of what I would call terrible to mediocre results. And it's only 10% for what is kind of a lukewarm result. The debate is mostly about how big the upside is and how likely the mid to high scenarios are, rather than about micro tweaks to the downside. You can still lose plenty, but you're not paying a rich price for the optionality. So let me see if KTEL is saying anything. Nope, KCAP is not saying anything. So I asked further question, which doesn't show up here, and I used much higher targets than these slow pokes did. So the answer came back, your upside case is internally consistent. If those annual recurring revenue ramps and the AIP TELUS flows materialize, even partially, the upside dominates and a 1 to 3 year takeout becomes plausible. So here's your assumptions. Railtown closed the AIP transaction, bringing in a network of close to 200 AI affiliates, and with the specific strategy to roll up the top performers and to push Railtown conductor agentic stack into that network. That's one assumption. Secondly, AIP describes itself, or itself describes Rail Engine as a key platform for its affiliate network going forward. This reinforces that Railtown is positioned as the default ingestion layer for those companies. Another assumption, Railtown is deploying its tools on TELUS's factory explicitly to provide sovereign compute to Canadian software companies and the broader Railtown AIP ecosystem as an alternative to Trump. You're essentially saying if that ecosystem really does, that AIP network really currently does 500 million in revenue today and spends greater than 100 million a year on hyperscalers, if that migrates into a Railtown TELUS sovereign stack, Railtown can credibly underwrite 10 million to 50 million to 100 million run rate in annual recurring revenue over the next few quarters, years. That is aggressive according to this computer, but directionally in line with the strategic intent of Railtown's own disclosures. So if you map it, you say that the enterprise is 50 million US to start with, and you're going to have your proof point at 10 million forward revenue, and I'm saying it could happen in March or next quarter. Assume strategic buyers pay a modest multiple once they see a clean 10 million forward ARR with growth, so somewhere between 5x to 20x. And given that this year AI infra benchmarks are hot, as they say, for private raises, lower for M&A, on 10 million, an 8 to 15 multiple, if that 10 million is growing, is defensible. So I put in Q2 that their growth could be projected at 50 million for 12 months. If this happens, you go into a must-own asset territory, particularly if growth is still high. So this would be 5x, conservatively 10x in the middle, and aggressively, but still within AI infra norms. You could get value here to $750 million Q2 projection. Relative to a 70 million Canadian starting point, conservative, you're talking 4x, mid, you're talking 7x. And aggressive, you're talking 10x, which lines up with what I've been telling you, although I've been saying 20x, maybe 25x. 10 to 25x. Given that AI infra and data moat companies have commanded 10 to 30x times revenue in late stage rounds and greater than 20x in top cases, a strategic paying 8 to 15 for 50 million annual recurring revenue with real AIP TELUS distribution and data gravity is not crazy. So step 3, if you look forward with 100 million ARR projected Q3, you get these same multiples, you're looking at $500 million, $1 billion, and 1.5 billion as your valuation. At the high end, it's 20x from here. So your premium AI infra names, you've seen 20 to 35 times revenue valuation. Databricks style leaders cleared 28x at the peak. You don't need these extremes to make your thesis work. Even a discounted 8 to 12x turns into very large multiples of today. Today, all my dreams. All right, let me see if K-Tel is saying anything. K-Cap, no. Does this shift the scenario tree? With your AIP TELUS view, I'd adjust the earlier scenarios. Fizzle, no traction despite AIP TELUS. Still possible, but probability of crapping out goes down to less than 25% because you already see a distribution base and sovereign compute wedge. The modest tuck-in at a small ARR, the probability is down somewhat because if they really ramp to 10 million, then to 50 million run rate quickly, staying as a small tuck-in story will be difficult. Strong strategic at 50 million plus, probability is up that they buy it. This becomes the modal successful outcome. And then the possibility of a platform level $1 billion plus asset. It's still a tail outcome, but it's fatter if the AIP affiliates and TELUS migration play out like I described and I have to you. On a US $50 million EV, a sale well below my $1 billion number is 3 to 7x. See, I think that's so conservative, but they're still saying the upside is considerable, even conservatively. Let's see what K-Cap is saying. Nothing yet. Upside versus downside framing of the investment. The downside, execution risk, is still real. Railtown must actually land and expand across AIP affiliates and convert hyperscaler spend into shared revenue with TELUS. If you don't do that, you can still see the stock go down. But given AIP's existing affiliate base, given TELUS Sovereign Factory as a credible hyperscaler alternative, and given Railtown's role as the default agentic ingestion observability layer for that ecosystem, the distribution and demand side of the story is more concrete than for a typical microcap AI tool. That is why, in my framing, the discussion naturally shifts to how big is the love? How deep is your love? How big is the upside, and how quickly does it get crystallized via M&A rather than is there much more to fall from here? I didn't go into the share count. Frankly, I got bored. AIP gives Railtown a pre-wired customer base, exactly. TELUS makes the offering more compelling and default for those customers. Together, they convert. All right, the call started. Let me see if I can get on this call. and shut up. If I can shut up. It says the space ended. Where's the call? I don't see this call, darn it. So I guess I gotta search for MMAT, maybe MMAT. All right, let me see if this guy sent it to me. Oh, I have to call in? What's the code? Damn it. All right, 1669254. All right, I'm gonna dial it. Of course I won't have the code.
Welcome to Zoom for Government. Enter your meeting ID followed by pound. You have not entered any numbers. Please re-enter your meeting ID followed by pound.
Okay.
You have not entered any numbers. Please re-enter your meeting ID followed by pound. Goodbye.
Yeah, goodbye to you too. I'll try it again, but it said I needed a number. I did dial pound. I'll show you again.
Welcome to Zoom for Government. Enter your meeting ID followed by pound. You have not entered any numbers. Please re-enter your meeting ID followed by pound. You have not entered any numbers. Please re-enter your meeting ID followed by pound. Goodbye.
Yeah, goodbye to you too. It needs a code. I don't have the code. I wonder if I can go on Zoom. Maybe it's on this guy Grigor's X page. Forgot his name already. Palakalikis.
Piano. So I do this every day, so I'm like, I might as well show you what I'm learning. All right.
Palakalikis. I don't know how to spell that. Hopefully it comes up. P-A-L. Okay, so let me see if he has any clue how to join. No, he doesn't show how to join a call. Which would be helpful for me, but I know other people probably have stayed in touch with him, which I haven't. So that's my fault. I don't know what to do. I need a code. I need a code to get in. And maybe it's because I've never called. It might be I've never called in before, so they don't recognize my number. I guess it's just going to be a call that I have to miss.
Welcome to Zoom for Government. Enter your meeting ID followed by pound. You have not entered any numbers. Please re-enter your meeting ID followed by pound. You have not entered any numbers. Please re-enter your meeting ID followed by pound. Goodbye.
I can't do it. Can't do it. Tried. Last Friday, I had a grand notion to jump in the river and drown. Irene, good night. Irene, good night. Good night, Irene. Good night, Irene. I'll see you in your dreams. Last Saturday night I got married. Me and my wife settled down. Now me and my wife are parted. I think I'll jump in the river and drown. I don't know where to go from here on that call. I'll try X again to see if anybody is having a call, and they're not. There's no space call. I'll go to KTEL if I can find her again. KCAP. She hasn't said anything, so I can't keep you. I don't have the ability to keep you up to date on the breaking news. But Eric, it is tough on the nerves, but I also think it's natural when you've got computers talking to computers. The stock ran up 2 perfect points to sell, and they know we run out of money, so they bring it down. That ability to move the stock between parameters, and they make money. They don't need low parameters. They can move it up to higher parameters, still make money in between. That ability is going to start disappearing, but it's not going to be right away. It's not going to be overnight. It could be, but it's most likely not going to be overnight. I wish I could help. I wish I could help get this news out, but I can't. Ooh. Amanda Platel. No one seems to dare say it, but William is the monarchy's next big problem. Wow. I wonder what news she has. I'll try again on X. See if she's updated. She hasn't. And I'll try the call one more time.
Welcome to for government. Enter your meeting ID followed by pound. You have not entered any numbers. Please re-enter your meeting ID followed by pound. You entered 1, 2, 3, 4, 5, 6, 7, 8, 9. This meeting ID does not exist. Please re-enter your meeting ID.
All right. So account settings, you don't have a meeting ID, and I have no ID. I guess I can just finish what I was doing for the time being. So the short answer is AIP gives Railtown a pre-wired customer base, exactly. TELUS makes the offering more compelling and is the default for those customers, exactly. Together, they convert existing spend, exactly, and annual recurring revenue into Railtown's own ARR much more quickly than a cold start. Exactly. Couldn't have said it better myself. So what the AIP situation changes, AIP is not just a partner, it's being rolled in to Railtown to create this affiliate marketplace built around Railtown's agentic frameworks and inside of a sovereign compute. So the key acceleration levers, it gives instant distribution into an existing network. Exactly. AIP brings a large affiliate base, hundreds of AI and SaaS companies who already have revenue and real customers, rather than Railtown having to sell tool by tool to tools in a cold market. Exactly. Another lever is they have built-in incentives to drive Railtown's revenue, annual recurring revenue. The AIP deal has explicit earn-out milestones tied to Railtown achieving ARR from AIP affiliates. It's silly, 1 to 2 million, it's irrelevant. Product fit, agentic infra for the network. Railtown's agentic frameworks and observability are purpose-built for companies building autonomous agents or AI-powered SaaS. The exact profile of many AIP affiliates, so the attach rate can be high once integrated. So there's roll-up optionality, which you know about. They can roll up those companies and capture more revenue that way. So it nets out that AIP compresses the 0 to 1 go-to-market phase. Instead of Railtown slowly knocking on doors, it turns into plug our stack into a ready-made network and let the economics and incentives rock and roll. So what the TELUS factory changes? The TELUS collaboration puts Railtown's agentic dev tools on top of a sovereign carrier-grade AI infrastructure that many Canadian firms already want as an alternative to foreign hyperscalers. This removes a major adoption blocker. It's all about sovereignty, staying away from Trump. So the TELUS Sovereign AI Factory keeps code, data, and IP on Canadian soil under Canadian jurisdiction. This turns, we like your tools but can't use US clouds for this workload, into we can deploy tomorrow. It makes Railtown the default, agentic layer on the stack. The collaboration explicitly states that Railtown will deploy its advanced agentic software deployment solutions through the TELUS factory, giving Canadian software teams access to Railtown tools as the native way to build and run autonomous agents on that sovereign infrastructure. So it gives a multiplier on the AIP network. TELUS's sovereign compute is not just for net new customers. The deal is positioned to give Railtown's broader ecosystem of Canadian software companies and affiliates, the network, domestic AI compute capacity. That means instead of each affiliate staying on US hyperscalers, they have a coordinated path to shift workloads into the Railtown TELUS stack. By sitting at the juncture of software, Railtown, and infrastructure, TELUS, Railtown can participate in value streams beyond narrow SaaS license fees, all tied to the same customers who spend on the hyperscalers. Net, TELUS converts we have a network into, we can give that network a sovereign enterprise grade home, which accelerates adoption and deepens the revenue per customer that actually migrates. And how these things work together to steepen the ramp in revenue. It puts AIP and TELUS together. AIP equals who, TELUS equals where and how, and Railtown equals what? Who, what, where, and how. So who is a large AI heavy affiliate network of existing AR and cloud spending. TELUS is a where and how of a sovereign AI factory that these companies can move to without governance or compliance friction. And Railtown is what? It's the agentic develop, it's the ingestion, it's the observability layer that becomes the operating system for these workloads. Mechanically, that means AIP affiliates are offered a migration path. Bring your AI workloads to TELUS Sovereign AI, build and run your agents on Railtown, keep your data and IP in Canada. Each migrated affiliate moves their tooling spend onto Railtown, a chunk of their compute spend into a stack where Railtown participates economically via the TELUS collaboration. And you know all this. Each successful migration increases revenues, annual revenues, from multiple angles, from platform fees, from usage, any roll-up economics, meaning the same get your mama effort yields more revenue than a narrow sell one license at a time motion. That is exactly the sort of structure that can justify an aggressive annual recurring revenue ramp that I sketched. I did that. You're not assuming Railtown wins random greenfield. You're assuming they systemically convert an existing book of AI revenue and cloud spend into their own platform economics with both ownership and infrastructure aligned to make that happen. Exactly. So then they asked me, do you want to know? And then they said they can't answer it. AIP hasn't published a list of revenue by affiliate, but their material spotlights can give us how much they could drive for Railtown. AIP says its affiliates in aggregate represent 500 million in annual revenue and 5,000 customers. Affiliates cross many industries, and they want to acquire and consolidate the best. The Railtown AIP deal explicitly states the plan is to use Railtown's conductor as the platform of choice. So this is what I gave them: 500 million, 100 million plus spend. Picture is directionally consistent with AIP's own framing, even if the exact hyperscaler number isn't disclosed. AIP's public affiliate spotlight series gives a sense of the caliber and category of companies. For example, FutureVault, Talos IoT, Gradient Ascent, AI Valley, Adesso. Largus Technologies, Nugget AI, ActCure, Supercharged Lab, Hopra, AI Innovative, SmartScreen. The revenue individually, many of these are below 10 million in business today, but AIP stresses that the network total is 500 million in revenue, and they want to identify the best for acquisition and scaling. The revenue potential for Railtown from this network, if even 10% of that revenue transitions to workloads meaningful to Railtown, plus TELUS, you're looking at 50 million of AI-heavy revenue context where Railtown can clip platforms and infra economics. Railtown's take rate would then depend on tooling platform subscription percentage of revenue. We don't know that. And I think that maybe should be tolling. Usage compute margin share versus TELUS, plus any direct revenue from affiliates, which are rolled up in that strategy. In other words, you don't need to get 100% of the network to move. Even partial migration of the best can support 10 million growing to 50 million, growing to 100 million in annual revenue. Bottom up, if 50 core affiliates do 3 to 10 million in revenue, you get to 200, 300 million revenue total. And if Railtown manages to sell its platform observability at 5 to 10% of their revenue equivalent and capture another slice via shared infra economics, another 5 to 10% equivalent across a subset, that move compute to TELUS, if 30 of those 50 affiliates meaningfully adopt Railtown TELUS over the next 2 or 3 years, per affiliate Railtown ARR may be under $1 million when fully ramped. Across 30 affiliates, it gives you $9 million to 30 million US revenue annually before you add up roll-up revenue. And then you layer on a long tail of smaller affiliates, any large new logos brought through the network Railtown brand, customers outside of AIP who still land on TELUS, and you can reach the rough ballpark of your Canadian 50 million forward projections if the strategy actually executes. So there is no league table. AIP gives a dense cluster of AI native already monetizing companies. TELUS provides a sovereign enterprise acceptable landing zone for their workloads. Railtown is positioned as the platform of choice for that network. And the roll-up plan means they can upgrade from platform fee to own the whole company on the best ones. AIP's key affiliates aren't just logos, they are pre-qualified funnel of AI workloads with existing revenue that Railtown can convert into its own revenue at scale. The exact per affiliate we don't know, but the 500 million network and the roll-up mandate makes my high ramp scenarios logically defensible, if execution is even moderately successful. Thank you for that. Then talked about Future Vault. They said, do you want to know? And I couldn't find out much. But it's got a lot of clients and partner professionals, and it's deep penetration into wealth and banking channels. And that's one of the companies in the network. There's no real future. But for Railtown, this means Future Vault is a high-quality multi-institution anchor if and when its document intelligence and workflows are run on Railtown's agentic stack and TELUS's sovereign infra. The ARR contribution could be meaningful on its own and a strong proof point for other financial sector affiliates. And I'm going to stop that there. Let's go to the comments. Let me see if KTEL is saying anything on, if there's any. There's one about XRP. There's, gold. All right. Ward Richardson says the rail car sale is still on. Buy all you can. At the end of the day, Railtown software is about efficiency. That is the definition of AI. RT software will work across all sectors of the market. Eric says, still a firm believer, but some weeks are happier. I know, it's heavy. It is heavy. Account setting, I just joined the meeting. I sent you the details. I did try to dial in, but I can't seem to do it. Ward says Railtown is so disruptive. It's a lot of Marwan Haddads. So I'll save that for tomorrow, I guess. RT is so disruptive, tens of thousands of companies will try a subscription first. Once they see how efficient their software really is, then RT will see 5, 10, 15, 20-year contracts. The royalties will be phenomenal. And Rail Bull Town says Railtown. Ward says be phenomenal. By the way, Railtown software is known to be 5 to 10 times faster than anything out there. With that being said, pick up a cash cow or two today. There is not much more time here. And Ward says to Eric, you and everyone else will see blue skies. Oh. You'll see nothing but blue skies from now on. All right, so I'm going to check X, see if there's any update or a call to go on to, but I don't see one. KCAP has not updated. So my suggestion here is you guys can try to dial into that call, that account settings on. You can tune in to a call about MMAT later, maybe. I can't somehow get into it. And I might leave it here at 5 o'clock. Let me just make sure we're not at war. Somebody said we're very close to war, and I hope we're not doing that. I hope this it looks like we're okay. But man, you don't want war. Yeah, it looks like we're okay today. All right, I'm gonna leave it there. I wish everyone peace. I wish the world peace, and we'll catch up maybe over the weekend, depending on how it goes. I was going to talk about this gold project, but I've got to be somewhere, so I can't. But I got everything out. I did my best. If I don't do, if you're not impressed, that's on me. But that doesn't change the story. And people have already been, I've been receiving. So I haven't done anything today, but Monday, if the total is there, that's big enough, I'll just send it. I'm not taking anything out of it, just sending it directly. Not keeping anything. I'm covering the costs, which is why I was going to say ask on Venmo, but I think I'll skip that for now. Maybe tomorrow or Sunday I'll ask for that. So anyway, I wish everyone the best. I hope you have a good evening. And I do agree with Ward. I don't expect that there's more than 2 to 3 weeks at the most that you're going to be able to buy Railtown. So hang in there. Thanks for tuning in. And we'll catch you on the flip side.